Today's tech news moves fast, but understanding it shouldn't be hard. That's why Snarful Solutions Group brings you Connecting the Dots, where we break down what's happening in tech and why it matters to you. Now, let's dive in with your hosts.
Welcome back to Connecting the Dots. I'm Alex.
And I'm Morgan, here from Snarful Solutions Group. Happy Thursday, everyone. It is October 30th, 2025.
And a nice day out there in Sacramento, mostly sunny, high around 77 degrees.
Yeah, pretty pleasant here. Though, nationally, it looks like a lot of rain, thunderstorms from the Ohio Valley up to the northeast.
Right, and even some coastal flooding forecast along the East Coast, so stay safe out there.
Definitely. Okay, quick market check.
Let's do it. Market's looking pretty optimistic yesterday. The Dow jumped, what, over 400 points?
Yeah, 401.280 points, up about 0.85%. The S&P 500 saw a nice little bump, too, up 12.60 points. That's 0.18%.
Okay, positive moves. But Bitcoin, still the wild ride.
Oh, yeah. Still volatile. It dipped slightly, about 1.87%, but look at the range bouncing between like $107,458 and $111,541. Huge swings.
That volatility, it really speaks to this underlying theme today, the intense demand, the pressure in the tech infrastructure world.
Absolutely.
Yeah.
Which actually brings us nicely to our sponsor.
It does. We are supported today by Old Glory. If you're maybe getting a head start on holiday shopping, especially for that techie friend, or maybe just treating yourself.
Always a good option.
Right. Old Glory is this iconic music and sports fan merch store. Really great stuff.
And you can use the promo code SNARFUL, that's SNARFUL, at checkout for 15% off your entire purchase.
Find them at oldglory.com.
Okay, let's connect some dots. Time for the Morning Star. And we have to start with Google. Alphabet. What a quarter.
A monster quarter indeed. Story one. Alphabet hit its first ever $100 billion quarter. Actually, $102.35 billion in revenue. Blew past analyst expectations on revenue and earnings per share.
Wow, $102 billion. And shares popped after hours, right? About 5%.
Yep. But here's the kicker. Analysts weren't just cheering the revenue number itself. They were, maybe surprisingly, cheering the company's plan to, spend a huge chunk of it immediately.
Exactly. That's the real story here. It's not the $102 billion coming in. It's what they're pouring right back out into infrastructure.
So where's that money going? Primarily AI, I assume.
Yeah. Entirely driven by AI demand, yeah. Google Cloud revenue hit $15.15 billion, beating estimates. But this comes at a cost. A really big cost.
Okay, hit us with a big number. Capital expenditure, right? CapEx.
That's the one. Alphabet raised its CapEx forecast for 2025. Again.
I remember we talked about the $85 billion projection just, a couple of quarters back? And that seemed huge then.
It did. Now they're projecting $91 billion to $93 billion for 2025.
91 to 93 billion. What does that signal? Is this, visionary future building, or is it just getting caught up in a massive AI arms race, maybe spending too much?
Well, that's the debate, isn't it? But from their perspective, this isn't really optional spending. It's driven by demand. The CFO explicitly said 2026 CapEx is expected to see another, quote, significant increase.
Wow. Beyond even the $93 billion.
Seems so. Mostly for data centers, the technical backbone to handle all these AI workloads. And, to put that demand in perspective for you listening, get this. They have a $155 billion backlog for Google Cloud.
Wait, a backlog of $155 billion? That's committed future business.
Committed demand for things like their Gemini 2.5 model, enterprise AI infrastructure, chips, the works.
Okay, so you're right. This isn't just chasing growth. It's more like a desperate sprint to just keep up with the demand that's already there.
Exactly. And they mentioned the Gemini app alone has, 650 million monthly active users. The demand is real, and it's immediate.
It's an infrastructure race, plain and simple, measured in tens of billions.
Right, and that race for infrastructure, all those chips, servers, data centers, it doesn't happen in a vacuum. It needs physical stuff supplied globally.
Which leads us straight into the geopolitical side of things. The supply chain meets politics.
Perfect transition. Let's pivot to Asia, specifically the U.S.-China relationship. Story number 2. That meeting in Busan, South Korea, President Trump and President Xi Jinping agreed to a truce.
A one-year truce, right, to kind of cool down the trade war.
Exactly, a temporary truce. And it was pretty critical timing-wise because a previous pause was set to expire very soon, November 10th.
But you emphasize temporary. So this isn't like a peace treaty.
Definitely not. No joint communique was issued, which is usually a sign. But there were some important concessions on both sides regarding tariffs and commodities.
Okay, let's break that down. What did China concede to get this pause?
Well, the big one was they agreed to postpone those export controls on rare earth minerals they just announced back on October 9th.
The rare earths. We'll come back to those. That's huge for manufacturers.
Huge. Those controls really had the potential to snarl supply chains globally. So postponing them is welcome news.
Okay. And on the U.S. side, we had those hefty tariffs in place. What did the U.S. give?
The U.S. agreed to cut the 20% tariff, specifically linked to fentanyl trafficking issues, in half. So that particular tariff drops to 10%.
Which brings the overall average tariff rate down a bit.
Yeah, it lowers the overall average tariffs on Chinese goods to about 47%. This is a noticeable reduction.
And I bet U.S. farmers are breathing a sigh of relief, too.
They should be. China also committed to buying, quote, tremendous amounts of soybeans and related agricultural products.
Tremendous amounts. Okay. How did the leaders frame this? I heard President Trump was pretty positive.
He was. He described the meeting as a 12 out of 10. Pretty high praise.
A 12 out of 10, wow. And the Chinese side?
Much more reserved. Their official statements were quite sparse, really just focusing on the need to avoid a, quote, vicious cycle of retaliation.
Vicious cycle of retaliation. That sounds transactional. Like they see this as just buying some time, not a fundamental shift.
That's certainly one reading of it, and it sets up our third story perfectly because this temporary relief runs right into a more permanent risk.
Right. Back to those rare earth minerals. This is where Google's massive spending connects directly to, well, global stability.
Exactly. These materials, things like dysprosium, neodymium, the ones with complicated names.
The ones essential for basically everything high-tech.
Pretty much. The magnets in electric cars, the chips in those $93 billion data centers Google's building, sophisticated military gear. It all relies on these minerals.
Okay, so the Truce suspended the export controls China announced last month in October. But you mentioned there's still a problem. Why is the supply chain still feeling shaky?
Because of what wasn't mentioned in the agreement. There's a massive loophole, basically. Remember those stricter licensing requirements China put in place way back on April 4th?
Ah, I do remember that. So those are still active.
Exactly. The October 9th controls are paused, yes, but the agreement said nothing about lifting those earlier, tougher April licensing rules. And those rules are still choking the supply flow.
So the relief is only partial. The bottleneck implemented back in April is still there, causing problems right now.
Immediate problems. And severe ones. We're hearing from European, American companies. They've been running down their inventories of these materials since April. It's getting critical.
What kind of real-world impact are we talking about?
Think about manufacturers making critical parts for cars like steering motors, high-tech braking systems. Some are barely getting enough shipments to keep production lines running. There have even been reports of brief shutdowns, companies scrambling to find alternative sources.
Which inevitably means price instability for future products. Things are going to cost more.
Absolutely. Do you want an example of how extreme it's gotten?
Yeah, give us one.
Okay, take dysprosium. It's used in special heat-resistant magnets, vital for EVs and other systems. Since April, the price outside China has shot up at least sixfold.
Sixfold. What's the price now?
It hit $1,200 per kilogram.
$1,200 a kilogram. Wow. Okay, so that gets baked into the price of an electric car, maybe even your next smartphone, passed right along to you, the consumer.
Precisely. So this truce, while helpful in avoiding an immediate cliff edge disaster, it didn't solve the underlying vulnerability in the supply chain. Not by a long shot.
Okay. And that vulnerability exists because other big issues weren't even touched on in Busan.
Right. Key unresolved questions remain. What happens with TikTok? What about those really advanced semiconductor chips, the kind Google needs billions of dollars worth of? The Blackwell chips and beyond. Still murky.
And the elephant in the room?
Taiwan. Not discussed. So yeah, this was a temporary ceasefire. It basically kicked the biggest, most strategic conflicts further down the road.
A temporary pause on an escalating high-stakes resource conflict. That feels like a good summary for today.
I think so too.
All right. Before we wrap this up, let's give a quick shout out to our other fantastic sponsor, Skony.
Yes, Skony. Premium golf shoes.
If you're a golfer, or honestly, even if you just appreciate really well-made premium footwear, you should check them out.
And again, use that promo code SNARFUL, SNARFUL at checkout, and you'll get 15% off your entire purchase.
The website is skony.com. That's skoni.com.
Okay, so let's quickly synthesize the main points for you today. First up, Google's record-breaking quarter isn't just about the money made. It's about the staggering amount, 91 to 93 billion. They're immediately reinvesting into AI infrastructure because customer demand is just overwhelming.
Right. Second, the U.S. and China struck a temporary trade truce. This lowered some key tariffs, secured big agricultural buys for the U.S., and generally gave the markets a bit of breathing room, which was needed.
And finally, number 3. That truce only offered partial relief on rare earth minerals. Crucial restrictions from back in April remain, keeping supply chains fragile and causing prices for essential materials like dysprosium to skyrocket up sixfold.
So the big picture here is that the absolutely explosive global demand for AI is pushing spending on physical infrastructure to almost unbelievable levels. And that spending is colliding head-on with geopolitical risk and fragile supply chains.
It really is.
What does that escalating tension over physical resources mean for the cost and maybe even the accessibility of the technology we'll all rely on tomorrow? Something to think about.
And remember, we're here to help at Snarful, so reach out on our website if you have any more questions.
Until tomorrow, thanks for connecting the dots with us.
Take care, everyone.
That's a wrap on today's top stories. Remember, tech doesn't have to be complicated, and we're here to help connect the dots. If you've got questions or want to learn more, visit us at snarful.com. Thanks for listening, and we'll catch you next time.